The Dow surged more than 1,100 points in late trading, making up some of the losses from yesterday's historic sell-off. David Gura is with me from the New York Stock Exchange. David, there's obviously a lot to talk about that's going on down there. So yesterday we have this emergency switch shut off, and then we started positive, sinks again. Now we're back up. What's going on? What do we attribute this rebound to?
Yeah, yesterday was a crazy day, to be sure. You saw where markets ended up yesterday, losses we hadn't seen since 2008. So what happened here is investors took a pause, took a deep breath overnight. This morning, we saw markets really rise when the day got started, and then there was this sort of pervasive uncertainty about the health of the markets throughout the day. So there wasn't a whole lot of what's called conviction in the market today. Saw it go up and down, up and down. The president spoke right around lunchtime. The Dow began to drop around that point in time as he spoke with healthcare executives vaguely about what some plans might be, rose here at the end of the day. So folks generally feeling like maybe it was a bit oversold yesterday, fell more than it needed to, but it's that sense there might be more certainty to come. Seeing the president go up to Capitol Hill, talk in slightly more concrete terms about what plans he and the Congress have that gave them some reason for hope.
Well, that is good to hear. So, as you're saying, the president keeps talking about lowering interest rates. What more can the Fed do?
So the Fed's hands are kind of tied here. They've lowered rates a lot. Last week, just a week ago from today, the Fed did this emergency rate cut of half a basis point. And that's something that was pretty extraordinary, done after a meeting with other finance leaders from around the world. And so they've pushed interest rates pretty low. There's a lot of talk about the Fed's toolkit, what it has at its disposal. A lot of that has to do with being able to raise and lower interest rates. And now they are pretty low at this point. So there are things that it can do. There's a meeting coming up next week when it's likely to cut rates once again. But there's been a lot of focus, at least on the president's part, on that, on monetary policy, on interest rates. The conversation seems to be drifting more toward fiscal policy. That is what the Congress, what the administration can do to help consumers who might be in dire straits here as this virus continues to spread.
Now, let's talk oil. So that also rebounded today after a total bloodbath yesterday. But why is that considered good news? I think from a consumer perspective, a lot of times it just seems like it's good for gas to be cheap.
What's so fascinating here is there is, and rightly so much focus, Savannah, on the coronavirus, the uncertainty surrounding all of that. But there are other externalities in the global economy that are still hugely important to investors. The election is one thing, having a primary today, and then the oil market. And over the weekend, we saw a price war break out between Russia and Saudi Arabia. For a long time, just to explain this in kind of simple terms, countries around the world have sort of worked together to keep prices at a pretty stable point, keeping an eye on the United States, which has incredibly cheap oil now because of all the drilling that we've seen here, all the shale drilling that we've seen here in the U.S. This weekend, we saw those two sides sort of say, forget it, we're going to produce more oil, we're going to drag prices down just a little bit. That's worrisome to those who watch the oil market. I'm looking at the board here now. WTI, West Texas Intermediate Oil, is up a little bit today, but $34 a barrel is still way less than what it was. And oil is important, Savannah, for two reasons. One is it gives you a sense of the health of the global economy, and seeing it lower isn't really a great sign. The other thing is it's tied into credit. It's tied into bonds and lending. And yes, the United States is now producing so much oil, but they've been able to do that because they've taken out loans and they've sold bonds. And the cheaper oil gets, the more worry it creates among those who've lent out that money, worry they're not going to get their investment back.
So as you said, not a lot of conviction in the market yesterday, but we're hearing more stable things from the president. Is this sort of why we're getting this advice to not just panic when the market's selling off so hard? If you're in it for the long term, it's hard to time a volatile market?
Far be it from me to offer investment advice, but that is always the soundest advice that you hear over and over and over again. It's best to take a long-term perspective. And that urge to stay calm is something that we've heard from investors, we've heard from lawmakers, we've heard from policymakers as well. So, yes, I think that is the best guidance. And I will say over these last 24 hours, you have seen lawmakers and policymakers doing all of the right things. They're having these meetings. They're being public about what's going on. They're talking about policy proposals that could have an impact here. There was a huge meeting today of the regulators from this country, from all branches of regulators, with the President of the United States. So at least those meetings are taking place. And the fact that they're checking the right boxes is something that engenders a lot more optimism in the health of the economy vis-a-vis what they're doing economically.
Definitely. Hopefully more optimism to come. Thank you so much, David.
Thanks, Savannah.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.